Hello, ladies and gentlemen, and welcome back to wearefree.tv, the channel that brings you different people from around the world that talk about various subjects to do with the new humanity, with the rising of the frequency, with different healing modalities, body, mind and spirit, different investments, alternative investments, new innovative ways of investing your money and preserving its buying power during these different difficult times that we are going through. Also, we actually talk to people who are able to channel different entities and ETs, and also, of course, we are heavily into healthy ways of living and many other subjects. So if you feel you wish to be interviewed on wearefree.tv, all you need to do is contact me on nocensorshiptv@gmail.com so we can arrange an interview. Also, please do join our Telegram group, which is wearefree.tv, as shown here. One word, no spaces or hyphens, wearefree.tv on Telegram. And there's also a link to our email list below if you wish to join as well. And of course, I will highly appreciate if you could share this interview with your family and friends so that they can also enjoy the important information that is coming your way today. As my guest is Mr. Adam Metzker, who is a full-time father, a reservist from a premium real estate unit, and now an active investor in the real estate industry. The name of our interview is The Crème de la Crème in Real Estate Investments. Be the bank. We're going to talk about investments in real estate, pros and cons, recorded office, loans, bank activity, and much more. So without further ado, hello there, Adam Metzker. How are you today?
Hello, Michael. I'm doing great. Thank you very much. Thank you for having me today, and thank you for all the viewers as well.
Great pleasure. And I see that today we have a very interesting subject, quite unusual. So perhaps you could start by telling us what exactly is private lending in real estate?
Yes, of course. Well, as part of the new world order and the new economy and everything, there's also a segment in the market that I think is very interesting. And private lending is basically doing what the bank is doing, only doing it privately. So in other words, you are being the bank for someone and you lend money, and in turn you get a promissory note, you get a mortgage, which can be either first position or second position, and we can talk about that. And then you basically make income, you make interest income, which is also taxed in the lowest tax bracket, by the way, because it's considered passive income and not active income. So private lending, private money is basically investing in real estate notes and giving liquidity, giving loans to either investors or consumers against their property and make interest income from it.
I see. So it's kind of enjoying both worlds. On one hand, you are, as a person, you can enjoy the security that the real estate business industry offers through a different business of money making in this instance for the investor, which is being a lender, someone who lends money like a bank. A bank lends you a certain amount of money and then they make interest. So basically you're saying to a private individual, be the bank, lend money to this other individual who is a home owner or who wishes to buy a home, and he will pay you back the loan plus interest, but nothing to worry about because his home is going to serve as collateral or as a mortgage against your loan, so your loan is safe.
Exactly right. Word by word, you nailed it. I'll add to it that this is really a very good option for someone that doesn't want to own property and have to deal with everything that comes to do with owning property. That's maintenance, paying the taxes, making sure the insurance is going, make sure that the property is rented and that the tenant is paying, and if there's any issue, you got to take care of it. So there's a lot of property management that takes place in real estate investing if you do it the traditional way of owning property. Here, we are offering, or we are sharing with you a way to to own a note, to own the paper assets, a paper asset that you're holding against the property. Exactly. The collateral, yes. The security is the property. So if the borrower, for some reason, defaults, which that is the last thing we want to happen. That's not necessarily what we want to do. If the borrower does default, then we have the opportunity or the option to exercise our security and basically foreclose on the property and get the property back. So that's the beauty of real estate note investing. And that's the...
Okay. You're describing exactly what a bank does. I mean, that's exactly what a bank does. So my question would be, are you allowed? I mean, aren't you meant to have like a bank's license to do that?
That's a really, really good question. There's definitely regulations around it. We are, obviously, we do everything with attorneys and we do everything by the book. So as long as we comply with the different regulations, which I won't get into right now, then as long as we comply with everything, then you do not need a license. There's no need for that. Essentially, you need to be what's called an accredited investor. We can get into that at some point also.
Okay.
But yeah, so you don't have to have a license. No, if you do a lot of them and it's a real big business of yours, then at that point, yes, you have to have a license. But
I see.
If you're doing a one-off here, one-off there, investing $50,000, $100,000, no problem, no license. We do recommend you do it not necessarily under your individual name. You do it under a company or a trust or some sort of an IRA or just a different kind of vehicle, a different vessel to take that investment. That's part of asset protection, which is also something we can talk about at some point.
So what does your company do? I mean, how do you get involved? Are you between me? Let's say I'm the investor, and then Joe Bloggs is the borrower. So what do you do?
So we do two things. We basically borrow the money ourselves. Our company will borrow the money from
me.
Investor.
Yeah.
And then we will purchase the property, we will do the improvements, we will do whatever it is we need to do to stabilize it and to make sure that the property is an asset and not a liability, that it's performing, that it's doing what it's supposed to do. When we buy properties, we don't just buy it for fun. We buy it.
You mean rentable, rent-worthy?
Exactly. Cash flow, exactly.
To ensure the money comes in on the property, yeah?
Exactly, okay. And that's something we've been doing for many, many years now. And so, yeah, we would borrow the money, say, from you and say, okay, let's say $100,000. We will pay you 10% interest per year. We're going to pay that interest on a monthly basis, and we'll give you the security. And
so the security is in the form of what?
A mortgage, an actual lien. That's very important. It's a lien. It's something that sits on the title of the property. It goes you record it. It's recorded in the recorder's office in the county, and that basically is public information. And it says to everyone that whoever took title, whoever's giving the mortgage, has a first or second position lien on the property. So
but
the
is
property,
it my name or is it you? Is it my name? Michael Bloom would be on the lien in the registry.
If you choose to use Michael Bloom and not work on your
company, sorry, the company that I will, the vehicle, as you say.
And yes, it would be your
name. So
name.
even if you, God forbid, vanish, I'm still safe.
Yes.
So let's drill a bit. Let's just take a scenario. So let's say that Joe Bloggs, who's the borrower, doesn't pay his traffic tickets, okay, to the city of New York, and now he owes New York municipality $1 million. So they then want to repossess his property, and they say, he owns this house. They go to foreclose or to repossess. They send the bailiffs in, and am I right that they will see that there's a lien by Michael Bloom, and they won't be able to recover the unpaid tickets through that method?
That is correct. Yes, you would be superior to their lien or to their plea or case to try to get that debt. So they're going to be subordinate to you. So that is exactly right. Since you're either first or second position, you're going to be the first or second to get paid off in case of a default, basically.
the more I listen to you, the more I believe the name should not be a real estate investor. It should be a bank. Because you don't call banks, since this is what banks do, I never heard anyone calling a bank a real estate investor, where that's exactly what they do.
Yes, that's exactly
be the
right.
Bank is way more sexier as well.
It's the best. There are some pros and cons which we can talk about, and we should talk about, because education and being educated. So
let's start with the pros.
Yeah, the pros. The pros are your income is very predictable. Whatever the arrangement, whatever it says on the promissory note, that's what you're supposed to get. It's not blue sky. It's not I hope it's gonna work. It's not I hope it's very defined from the beginning. Now, you do have to do your due diligence. Of course, there's risk. There's risk in any investment. And
what's the risk?
Listen, the biggest risk in this case is that you'll get the property, or you'll have to do the foreclosure. But at the end of the day,
that's not a risk. You mean, again, that the risk would be the hassle, but I won't lose my money.
Right. You shouldn't. The risk can be a big downturn in the economy, like 2008, 2009, and now the borrower is not able to pay, so they're in default. So there's definitely, there's different type of risks.
But that's a very unusual, just want to make sure, it's still a very, very unusual situation, where if the property market crashes completely, then all hell will break loose on all levels throughout the economy, including this poor lender. But besides that, you should be pretty safe. That's the whole point here.
I have never lost 100% of either an investor's principal or my own principal investment. In real estate, there's no reason for you to lose 100% of your principal investment.
So in 2008, were you in the business?
I was in the business, yeah. I just started. And, we just had to plug through it. We just had to keep going. We just had to we had to work harder to get to the same results, basically.
Yes, I see. It's interesting because actually I feel more confident with you than with the bank, because the bank, who's the same thing as you are not real big experts on running properties and plowing through, as you say. They just see you as a number, whereas you, with all your extensive knowledge and experience in actually running properties for people, I'd rather put my money with you than with them, if you see what I mean.
Yes, of course. And the banks don't pay any interest. That's the other thing. What is the bank? The bank takes the deposits. That's the money that you deposit in the bank. And then they go out and they lend 12 times the amount that you gave them. That's what they're allowed to rent, to lend. Basically, they rent money also. We can talk about that's also.
Yeah, well, the banks are your competitors here. So they don't want you doing this. You're taking away their business.
Right. They do not want us to do this, and they are our competitors, because it's true. You're going to get, as a borrower, that's important also, as a borrower, you're going to get a better interest rate from a bank. But not everyone can qualify for a bank loan, and not everyone wants to deal with the bank. So they want to do it on their own, and they want to move faster. When you do it privately, you can move much faster.
And the rate's better? So if I need to borrow money, you're telling me, come to me rather than to you, rather than go to the bank, because I'll actually end up paying less interest through you.
You'll pay more interest with me.
Oh,
with
more
the bank,
interest.
Yeah. With the bank, you pay less interest, but it's a much seamless, more accessible process.
Yeah, I see.
But more than anything, we're in the business of real estate and buying real estate and improving the property. So we're looking to borrow. That's what we do. And right now, we're paying anywhere between 8 to 12% on an annual basis to our investors.
Yes. Okay. So we spoke about the pros and cons. I also believe that the con, which again, not really a con, is that, again, because I refuse to call this property investment, and I rather call this be the bank only, then it's not really a con. Because what I'm about to say is, if it was property investment, which it is not, then one could say that, well, hang on a minute, what if the property market shoots up and triples? Well, I don't get anything. I just get the standard interest that we agreed upon at the beginning. So, well, I'd say, well, of course, because you're not really in the property industry, you're in the banking industry. And just like the bank won't get 3 times compensated if the property market shoots up, you won't get it because you're a bank.
Yeah, exactly right. Exactly right. So it's a risk reward kind of relationship ratio, and it's very defined. That's what's nice about it. So it's very defined, and that I think it can be a pro, and some can say it's a con. So that's another thing. I invite all our viewers to take a moment when they have some time and think what kind of an investor they are, what kind of a DNA. What's their investor DNA? Every investor is willing to take more risk, less risk, wants this collateral, wants that collateral. There's many different risk profiles. Everyone needs to understand where they sit on the spectrum of real estate investing or investing in general.
Yeah.
Being the bank is it's kind of a no-brainer. It's a no-brainer for someone who's looking to preserve capital. If it's someone in their 20s, maybe they want to do more quantum leaps and they want to own the property and improve it and work hard and deal with it. But someone that's looking for a passive investment that pays dividends on a monthly basis, this by far, and I'm speaking from experience because I also do it. I borrow and I lend, and I do that. I preach what I'm talking about. I teach, I preach what I'm walking the walk, I'm talking the talk, this is what I do. This is what I do.
Yes.
And just got to break the ice and do it, That's it.
One more question, if you don't mind. Well, not one more, but another one that just popped up. Can multiple different investors give money to the same borrower and receive a portion of the collateral?
Wonderful question. Again, yes. The answer is yes, 100%. So that's called a parcelized note. Parcelized note. You're parceling the note into two or more. So 2, 3, 4 people. The answer is you can do that. If it's 4 people, so each one will have 25% of the note. If it's 2 people, 50% of the note. And let's say the note is $200,000. So if it's 2 people, it'll be 100 and 100, and each one will own that portion of the note. And the important part of that is that when you do that, you both remain in first or whatever position the lien is, you both remain in that position. So it gives you much more power as far as exercising your collateral if you need to.
And that's another pro in the sense that you can invest any amount. Some people say, I'd love to get involved in something to do with property directly or indirectly, but I only have 50 grand and there's no whole house that actually costs that amount. No problem. You could give 50 grand and get involved in the property market indirectly.
Yes, and there's a huge opportunity and a huge need for, we call it microloans. Microloans are anything below $50,000. People that have $20,000, $30,000, it's just sitting in the bank. It's losing its buying power. Inflation is running rampant. It's sitting in the bank. Chances are they're going to start eating into their savings. They're going to start going out more. They're going to start spending it. Next thing you know, they have nothing. So if you have a little bit of money, even $20,000, $30,000, $15,000, $5,000, just money, that you want to basically package up, put it somewhere, set and forget, make interest income, and then at some point, based on the note, you get a balloon payment and you get your payment back with the interest. And then you can roll it into another loan. But that's how it works, And
let's look at some examples. Then I'm going to show on the screen right now. I am showing this the document that we scribbled off the details at the top. Mm-hmm. So what do we have here? We have a table that shows 75,000. Sorry, what's that? 42,500. And 75,000 loan amount. What's that?
Right. What you're looking at right now is a closing statement, and that's basically the statement that puts all the numbers together for the transaction of said real estate deal. And there's a buyer on one side, there's a seller on the other, and then they just run the numbers over there. And what you're seeing there is a $75,000 private loan that an investor gave us to buy that property.
I'm showing the next page, which is a continuation of the table, and the end is 78,168 credit and debit same amount. So that's the basically each line is different kind of expenses related to the loan.
It's an itemization of costs related to the real estate transaction.
Uh-huh. which is basically the money that I lend.
Yeah, so your money that you're lending will appear on the closing statement. That's correct, as a lender.
I see. Okay, good. Let's go on to another page, and this is basically a house. You can see here an example of a grey, massive house. So what's that?
That's a flip house that we did. We bought it with investor money. We went inside, we fixed it up, and then we sold it. So we flipped that house.
And were there any investors along these lines that you described here?
Yeah, there's actually, on that one, there were 3 investors in 3 different tiers. So first position was $110,000, second position was $50,000, and I think we also took a third on that one for $40,000 to finish the renovations and sold. Yeah.
And now we're going to look at another photo, which is this other house with a red car parked outside. Can you tell us about that, please?
Yeah, that house is a really cool house. It's a house we bought and then we sold it on contract. We became the bank, okay? Now we hold the asset, so instead of someone having to come up with $150,000, we say, you know what, here, come up with some sort of a 10% down payment, maybe $15,000, and then we'll carry the note on it. We will finance the house for you. We are going to be the bank. You just pay us as if you pay a bank. Just pay us. But you're in charge of all the maintenance and the utilities and the wear and tear and the plumbing and the heating and the roof and the windows and everything. So it takes out a lot of the headaches, a lot of the expenses, a lot of the unknowns in real estate ownership.
Yeah. And you obviously held the title to the house until, or you're probably still holding until he pays you back.
So you hold a position on the title, basically. They become the legal owners because we're the bank. At the bank, we just have a mortgage, basically just a lien saying that they owe us money. They cannot sell this house before we get, or transfer ownership before we get paid off.
So you were the lenders here, just like you explained where I was the lender. You were me in this case. You did it yourself.
Exactly right.
I see. Okay, and another document.
Huge market. Owner financing, huge market. It's helping people do things that they never could imagine they can do. I mean, the bank, when the bank says no, we say yes.
Yeah,
that's
amazing. When the bank says no, we say yes. Brilliant. So now
I'm showing the bank. We don't like the bank.
You're not?
We don't like the banks. I like it when they lend me money, of course, but as a whole, I don't like the centralized banks. Yeah.
Same here. So I'm showing a promissory note on the screen. Would you like to explain about that?
Yeah, the promissory note is a very important instrument. Basically, it's a promise to pay in the future. It's like cash. It's a real asset. It's something that says, this is how much money I promise to pay you back. Michael, you gave me $100,000 or $150,000. I'm going to pay you 10%. I'm going to pay it every month. I'm going to pay this amount exactly. I'm going to start on this date and I'm going to finish on that date. So basically, the promissory note outlines and gives the exact pathway for your money to work. It's giving you the direction of the money that it's going. That's what it does.
And then if I scroll down, we see a real estate mortgage.
Oh, yeah. The real estate mortgage comes hand in hand with the promissory note. Together, they're very powerful. And the mortgage is what gets recorded. The promissory note does not get recorded. The mortgage gets recorded and in the recorder's office, in the county offices, and that is your actual security instrument.
I see. Okay, very, very interesting indeed. And on to the final document, which is a Del Toro Loan Servicing Inc.
Yeah. So again, I want to show real examples of real things that actually take place. And that's a statement coming from a servicing company, a loan servicing company. The loan servicing companies are like your money managers or your investment manager. They collect the payment for you, they book it, they do an accounting for it, they book the payment on the loan, they process it, and then what they do is they send you the payment to your bank. And what you're looking at is a statement that you get from the loan servicing company, which outlines the amount of money you lend, what the interest rate that you're getting, is the loan current, when was the last payment, when is the next payment, what's the maturity date of the loan. Just a bunch of data that sits on the report.
So instead of me running Excel spreadsheets and trying to figure out how much I've repaid or received and what is the percentage overall, blah, 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 they just do the calculation for me. And I'm presuming they obviously charge a fee for that. Is it a unreasonable fee from your experience?
It's a nominal fee. It's $20 per statement.
Nothing.
Yeah, it's worth it. It's definitely worth it. Of course, at the beginning, I had trouble with it because I'm like, I want to save that money. But, it's worth it, and it's the right way to go.
It's like a meal in a restaurant.
Yeah.
I see. Definitely worthwhile. Okay, so these were the different examples we showed on screen. And now I'm wondering if you could tell us about deals that you're working on at the moment.
Yeah, sure. Right now we have several deals we're working on. If you are interested in learning more about them, I'll be happy to share. All the deals that we do are in Des Moines, Iowa. We're buying a big, old, historical building that's huge, 12,000 square foot, that needs some remodeling and some work done. And so that one is really exciting for us to be working on. And then on top of that, we're working on purchasing a big, large office building. So that's another thing we're working on. And then we have a couple of houses that we're running now as Airbnb. And those are going to be up for sale here also soon. So if anyone's interested in any of these, by all means, feel free to contact me.
Brilliant. Obviously, your details will be shown under the video. And is there anything else you wish to share with our viewers?
First of all, just say thank you for listening, and I do think that you got to get out of the traditional financial system. What I shared with you today, you do not hear anywhere. Very rarely would someone tell you that even exists. So my only plea here is that know that there's other ways to make money or do investments aside from the stock market, or aside from speculative investments in different securities or non-securities. Real estate has been there forever. It's forever going to be there. That's the way to go. And I invite you to come up, to join me in this journey. It's a very, very interesting journey. Very nice.
Amazing. Fantastic. Wonderful.
Okay,
really interesting information you've shared with us, and for that I would like to say to you, thank you very much.
Thank you, Michael. Thank you very much.
Take care now. And to our lovely viewers, the time has come for you to be the bank. Stay free, and thank you for watching wearefree.tv.